Hello everyone, this is Mayank and welcome to my channel. So today we'll discuss about one more company called India Pesticides Limited. So this is a company in the agrochemical sector. We'll understand the company, we'll understand the business of it, understand the sector also a bit, and then we'll see few points about the company's future plans. And after that we'll see the fundamental details, and then we'll jump into the technical charts and we'll see what kind of opportunity we have in the short term and what kind of opportunity we can have in the long term as well, keeping everything in mind. So we'll discuss all the final things, everything about the company and everything else. But before I jump into all those details, as usual, disclaimer that this is not a recommendation video. This is my personal research. If you want to invest in this stock, please do your own due diligence before investing. And second thing is that I have a Telegram channel also. The link of that is in the description of this video and all other videos on the channel. So if you're interested in small updates, then please don't forget to join the channel and the link given in the description. So let's start the analysis part. So India Pesticide Limited, as I told you, it's a agrochemical sector based company, and the IPO was done a couple of months back in the month of June. So almost in the month of July it got listed, so around 1.5 months back. So it's a newly listed company. So understand the entire business, we'll see why it is so important to discuss this company and why I see an opportunity in that from business perspective as well. So let's go into about us and see what this company does in terms of brief profile. So this company is one of the globally operating agrochemical manufacturers in India, and they are doing business from 1984. Okay, and what this company is done? This company is into herbicides, fungicides, and insecticides as well, which they recently launched, and they are into APIs as well. So it's formulations. If you want to know more about the company, let's go to Chittorgarh, which is the IPO based website. If you see here, then this company, as I told you, is 1984 based started, and this is one of the leading agrochemical manufacturers in India. And this works in two different verticals: technicals and formulations, and manufactures herbicides, fungicides, technicals, and APIs. And it is the sole Indian manufacturer for few products like Folpet, thiocarbonate, and herbicide, and it is globally top company in particular this domain. It has export to more than 20 plus countries, which includes Australia, Asia, Africa, and European countries, and their total export contribution is 62% as of fiscal 2020. They use the client base, we can see in their own company profile also. Now if you see the entire client base, the clients like Syngenta, UPL is all listed and quite popular. Sharda Cropchem is one of my favorite company personally, and it's also a good company and listed. Strotus is a big company. Essenza is also a very big company, and then you have Conquest as well. So they have very big clients what they deliver to, and they have a very good FOB kind of engagement with its clients. So I'll discuss that FOB part a little later. Now let's go into more the details what kind of things they produce. So we go for products. So once you click on products, you can see the details. So I told you fungicides, herbicides. They also launched insecticides also recently, one product in that particular domain. It's a new product basically. Since fungicides, you can see these technical products which I cannot pronounce, and this herbicides also this couple of products which again I can't pronounce. Okay, so these are things which company deals with. If you see agrochemical formulations, they have these many things: growth regulators, fungicides, then herbicides and insecticides, as I told you. So there are a lot of things this company does, a lot of products which falls in this particular category. You can explore the site more and see what kind of products, what they do, what kind of crop these particular products are used, if you want to know more into the technical part of this company. So product wise, this company has a lot of variations in the product. And now if we discuss about sector, there are a couple of sectors which is growing very fast in India, when you know the reason behind it. One is agro sector, where government is also putting a lot of focus. Startups in India are also putting a lot of focus in the agro sector. So overall agro sector is growing a lot. Second important sector is small finance banks, which I already discussed a couple of videos in the past as well. So, and these are the few sectors which are going to go very fast. India's per capita income and the focus on rural areas increases more. The sector of specialty chemicals also doing very good in India. So keeping those sectors, agrochemical sector is one of the leading sector, and this particular company is a leading company in this particular segment, because this company, as we discussed here, it's produced some products which is it's a global, it's a leader in India, the only company which produces this kind of products, like as we discussed. And if you see, they are among the top 5 global players in this particular products: Folpet, thiocarbonate, and herbicide technicals. So top 5 global player, when you say, this means a lot, and there are only Indian companies produce this kind of product. So it's, you can say, for this particular product, this company has a kind of monopoly. Now, if you see some fundamental growth of this particular company, then we need to go for fundamental analysis. Now, here if you see this company, small cap company with a market cap of 3,666 crore of market cap. Current price is 318. This is one day old price. Today's price was 314.75. After this company has got lost 1.13% today. Now, by the time the video gets uploaded, the price will little changed because it will be uploaded to, one day later when I creating the video. So keep that in mind. And also, if you see more, ROC is 52%, ROE is 41.6%. They're exceptionally good ROC and ROE. And this company has debt of only 30.3 crore, whereas net profit is 135 crores. This company is virtually debt-free company. Debt equity ratio is 0.08. That says almost this company is completely debt free company. So a company which is a small cap company and then is completely debt free and has a good ROC and ROE. So all the check boxes are checked, and this says how this fundamentally company is so strong. Now if we see the growth of this company quarterly results, is that it was a newly listed company. So if only can see 3 quarters, 116 crores, 133 crores and 170 crores. So in June 2021 quarter, a lot of company has not reported a growth in revenue, but this company has reported a growth in this their revenue. So this is a good point. Same reflects the net profit also, 24, 27 and 42. So this is a good sign. If you see further in the profit and loss for yearly basis, from 2017, 223, 248, 341, 480, 649. So even in the pandemic year also, when other companies reported drop in revenue, this company has reported a growth in revenue. So that's a very, very strong point to notice for any company. Same goes for net profit also, 35, 33, slight dip, then 44, 71, 135. So they are doing very good in terms of sales, in terms of profit, in terms of net profit. Operating profit margin also doing very good for last 3 years, 19%, 20%, 28%. So these are the very, very good points which happened in the past, and company has done quite good. Let's see the reserves. Reserves from 117, it's 107, 141, 184, 254, 378. So it's consistently growing. So it's almost for 3 times, more than 3 times in 3.5 times in the last 4 years. So that's also a very good. So all the right check boxes which I already always discuss, the ROC, ROE, quarterly growth, yearly growth, reserve growth. So all these points are perfectly fitting the growing stage of this company, and that's a good sign or kind of a good motivator for us to select this kind of companies which is strong fundamentally. Shareholding pattern, they have 68% promoter holding and 31% with the public. So FIs and DIs are not involved, but seeing the growth of the company, sooner or later the FIs and DIs will come into the picture and they will have a good holding also, which I'm expecting in with the kind of growth this company is showing, that will eventually become a norm in this particular company's shareholding pattern. Now, so this is what this company has been so far. Now if you go further, what this company is planning to do, because this is a growing company, so they are predicting industry growth rate will be 8%. So these are the data what I'm showing you. This is taken from their conference calls, quarterly result conference calls. I've gone the entire document and everything. So these are the few points which I could take out from there. As per those document and their management talks, industry growth expecting at 8%, 50 to 60% export they're trying to maintain. Already I told 62% export they do. The entire revenue of 62%, the entire revenue is from exports. They are trying to maintain the same ratio, same percentage of revenue from exports. They launched 2 new molecules. One is herbicide, one is insecticide domain, and they're expecting around 100 crore revenue from herbicide and 30 crore revenue from insecticide in next 1 year. So that's a another revenue, extra revenue apart from the current products. As well, they have FOB based contract. So why it is so important? Because the meaning of FOB means whenever a client takes your product, they buy your product whenever it leaves your warehouse, and in the middle whatever transportation cost is there, what logistics costs are there, whatever risk breakage, if it is physical product breakage, if it's chemical product, then will leakage and things like that, all are not the responsibility of the supplier. It falls on the client's side. So they are the responsible for everything. So whatever the price fluctuation that happening in the market, logistic price have increased, fuel price have increased, transportation cost have increased, so everything is on the client side. So this company is completely resisted from that, or completely protected from that kind of fluctuations. So this is a very good part for a company which is under FOB based contract. So you can understand how this company is have pulled themselves away from all these fluctuations happening in the market because of pandemic, post pandemic effect. So this is a good point to note. They have planned a good amount of capex, capital expansion in next 2 to 3 years. They are trying to do a capital expansion of 300 to 350 crores. and they're starting a new plant also, apart from the investing in the capacity expansion of existing plants. So these are a few good points for this company's planning, and that is a good it gives a good kind of motivation or good kind of confidence that the company is going in the good direction and management has good intention related to growth of the company. If just you want to see what kind of, we go to back to fundamentals and see a few things like current work in progress. I always emphasize on this part because I think this is how the company will grow, right? So here the CWIP is 212 crores in March 2021. So that's a good. If you see last, always 3 crore, 3 crore, 5 crores, and this particular quarter they have, particular year basically they have current work in progress is 12 crores. So that is very good. Now let's jump to technicals. So if you see technicals, what kind of this company, newly listed companies, there is not much to discuss in graph for this company, but still, if you see the pattern of IPOs in 2021, all good companies with strong fundamentals, sorry, they have listed with good premium and they have again fall down. So people have started profit booking and they have fallen down, but for all those companies with good fundamentals, strong fundamentals, they have gone up again. So there are two kind of things. One, they list with your premium, and they also fall down, and then again they list with, again they move up because the fundamentals are strong. But when they fall down, they never fall down to their IPO price. So that happened with many companies. Just for example, if I show you, let's go to Burger King. It's just an example. There's no relation between Burger King, and there's no relation between Burger King and any company, basically India Pesticides or Zomato also. I'll just show you that also. So if you go to Burger King, they listed at this, I'll just do it 1 year. So I think it's less than 1 year. So that their IPO listing price was 140, but they were IPO prices even much lesser than that. And whenever they crashed just close to that price, 125 and all. So they crash after IPO, but they never crashed the price what the IPO was launched, basically not listed. IPO was launched. So same pattern I am trying to notice here also. India Pesticides, if you see, so India Pesticide also, when listed, they listed with a premium. Almost 29 times they were people were bidding for the shares. So they listed a premium, then again dropped, but they will never drop below the IPO offer price. So IPO offer price was close to 296. So if you just show the line, it's just to show you the kind of risk and reward ratio. So here one line is there, and this is the peak what they have reached when they listed. So almost here. So I'll just pull it down and I'll just drag it up on the top to what price they have reached. So this is what we have, a top line like a boundary. And now if you see the current price is, closing price is this. So if you talk about risk reward ratio, so this is the kind of risk, even less than that, but this is the maximum risk what we can have in this company. As I told you, it will, most of the companies, this kind of fundamentals, they never cross their IPO launch price. So this is the IPO launch price 296. So the risk is only 5.8%, but when you talk about reward from this, minimum reward is here. So minimum reward is around 17%. So minimum reward is around 17% in this company. That's the minimum reward it will reach to its level. But the concept of technical chart is, once it crosses this particular resistance level, they'll start moving much higher than this. So that is a long term, medium term and long term opportunity. But very short term opportunity and risk reward ratio is this particular figure, 5.8% the risk, but 17%, more than 70%, nearly 70% is the reward, minimum reward that can go to a very huge amount of reward, considering all the fundamentals point, technical points, all the business points, what the future plans of this company is. So this is what I want to discuss about this company. Target wise, if you see, if you invest in the current price, immediate target is 360 rupees or 768 rupees for this particular company. Long term target and all that we can discuss when this chart, we can get chart pattern on whatever this company does in the next 6 months, on whatever they have given in the conference call, how many points they complete. So people talk a lot, but let's see how this management comes across and how many of those promises they fulfill. So based on that, we can decide what the long-term target and future target for this company. But immediate short-term target is 17% minimum you can get in this company. Now, if you ask me honestly, it should not take more. It will never take more than 2 quarters. Now, 2 quarters means 6 months. 6 months, 17% return. I will take it any day because this almost comes around 34-35% return in a year. I'm always happy for that. I don't want a multi-bagger. I never hunt for multi-bagger. It's a false concept because you don't know which company will become multi-bagger. You invest in 10 companies, it might happen that none of them will become multi-bagger. Or invest in one company, if you're lucky, that company might become multi-bagger. So I don't never hunt for multi-bagger. I personally follow you. Hunt for companies which makes you profit and keep hunting for that and multiply your profit from company to company. And that's how I had make my own money, and that's how I think others should also try to make money from stock market. Don't go for jackpots. Jackpots never work. That's a gambling, right? So so it's your call however you want to invest, but this is my personal way of investing. So if you like this video, if you like what we discussed here, don't forget to share with your friends. Don't forget to like the video. Don't forget to add your comments, give your feedback in the comment section. Don't forget to share with your friends in social network. This will encourage us to put more videos, create more content, give it more to the community. Thank you so much for watching. Stay happy, stay safe. See you later in the next video.